Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. SEBI panel headed by HR Khan may suggest changes to the foreign ownership rules. Shivinder Singh takes elder brother Malvinder and former managing director of Religare Enterprises Sunil Godwani to the NCLT. Amazon joins the rank of Apple, becomes the second company to have a market cap of more than $1 trillion. The rupee will start the day below the 71.50 mark against the dollar. The 10-year bond yield shut shop above the 8% mark for the first time in almost 4 years. And that's really the news flow around the world, isn't it? Around the EM market, if there is one thing that is dominating trade, that is what's happening to the EM currencies. Let's focus on what's happening around the world. Remember, the US market shut shop slightly negative yesterday. The Asian markets are starting off lower. All that is fine. But I think what's driving this entire unrest, if you call it, around the world markets and the EM pack in particular, is what's happening to the currencies. Now look at this emerging market currency chart that's been there in the Bloomberg story, and look at the pain. The emerging market currencies are set for the lowest close since May 2017, not 2018, May 2017. This is the lowest point for the EM currencies in over 14 months. A bunch of EM currencies had record lows for themselves. So Indonesia, Turkey, the Argentinian peso, the Indian rupee are amongst the currencies which are trading or closing in at record lows. We all know the issues surrounding Turkey and Argentina, but the Indonesian rupiah as well came off. The Indian rupee, on account of what's happening across the world and in the EM pack, is the other emerging market currency which is trading at record lows. And that is essentially what is driving the pressure. It's not necessarily only the dollar strength, but the emerging market weakness at large, which is weighing in on a bunch of these money markets as well as the equity markets too. What is not aiding is the current conversation around the world trade as well. Bloomberg News cited Donald Trump yesterday saying that the additional tariffs of $200 billion on the Chinese goods or the Chinese imports could be levied as soon as this Thursday. So that's an important event to watch out for, in addition to the Canadian and the North American or the Canadian and the USA talks, which will come about on Wednesday. So lots to watch out for on the global front in terms of uncertainty. And adding to this whole conversation about how narrow the rally has been, we had one more landmark being achieved today, as the headline stated, that Amazon follows Apple to cross the $1 trillion milestone. Of course, it slipped from those highs, but Amazon is now only the second company in the world to hit that $1 trillion market cap mark. Also, just bringing it to our faces how narrow this rally has been and how there are certain companies across the world and in India which continue to rank up market cap at a time when currencies and the global GDP and the macroeconomic factors don't look all that good. It was showing in our markets too yesterday. I mean, just look at the trade setup and what happened in our markets in trade yesterday. We slipped for a second day on a trot. Bank Nifty led the losses, and the market breadth was very weak on a day of fairly high volumes in trade. That was the key thing. Volumes went up, especially for the broader end of the spectrum. Delivery-based selling coming in a bunch of these mid-cap stocks, and the market breadth was an abysmal 1:5 in favor of the declines. Look at the nature of the selling as well. If we just look at what the nature of the losers has been in the last couple of days, you have an HUL, Asian Paints, the Bajaj Twins, Finance and Finserv, Ultratech Cement. These are the stocks that have lost out. We don't have heavyweights. We don't have the corporate-facing banks which are correcting now. The ones which have performed the best are starting to correct and pull back in a meaningful way. And that could be a worry as well. And frankly, in light of all that's happening in the emerging market pack, I really doubt that we can expect any kind of green on the screen. So today could well be another day of weakness persisting in the Indian markets in light of what's happening in the emerging market pack. However, amidst all of this, what's to be watched out for from a specific stock-specific perspective? Aviation has been battered and bruised. Can this statement from Qatar Airways restore some bit of sanity for Interglobe Aviation? Doubt, but the CEO has said that they are not ruling out investing interest in Indigo. I think they categorically said that if Interglobe Aviation comes to them, they'll really be open to considering an investment in the airline. Let's wait and watch. We all know what's happened to Jet Airways over the medium term, even after money came in from Etihad. I don't know if this news spurs about a near-term interest in the Interglobe Aviation stock or no, but something to focus on. Remember, last couple of days we've been talking about, we at Bloomberg Quint have been talking about the FMCG valuations above the 2 standard deviation. Now, Credit Suisse has come out with a note on the FMCG space, but amongst all the things that they've spoken about, I thought what they spoke about HUL was interesting. They've downgraded the stock to neutral. They've lowered the target price to 1770. They've cut the FY20 and FY21 earnings estimates by 2 to 4% respectively. They believe that pricing in the intensifying competition going ahead would be difficult to manage, and which is why it's better to downgrade this stock. So that's one thing that has happened, and we'll talk about it a bit later on the shows as well. And Muthoot Finance, well, I thought the numbers looked okay. I think the challenge is what will happen as a result of what's happened in Kerala. We've seen what's happened to its subsidiary, which is Muthoot Capital, a small fry compared to the larger parent. But the numbers for the quarter gone by have been okay. I think the questioning that we'll do with the management today at 9:45 will be all about how is it that this challenges now about Kerala will shape up their quarters ahead. So I think that will be the interesting one to monitor. But the reported numbers looked okay. Revenue from operations up 19%, net profit up 43%, provisions down about 79%. So the quarter gone by was okay. Let's wait and watch what they have to say about the quarters ahead. However, what's lined up on First Word today, a packed First Word really. We first get in Jayashree, who comes in to talk about the changes proposed by the Khan panel, HR Khan panel, in their draft report on the foreign ownership norms in India. This came out post-market hours yesterday, so there's news to it. We'll talk about this with Jayashree. Shivinder Singh may have decided to split from his brother. Will the family tussle only lead to more losses for Fortis shareholders as dirty linen gets washed in public? We try to weigh in on that. As Adani Enterprises gets set to record the cutoff date for Adani Gas, Somit tells us what's in store. And then Jayesh takes us through the list of stocks which saw the highest upgrades and downgrades in the month gone by. We end with just how much Jeff Bezos is now worth with his startup, making it to the $1 trillion club. Okay, first things first. Something that's been talk of town for Indian markets. A day after the market regulator said that it's preposterous to assume that foreign funds worth $75 billion will leave the country, SEBI may be rethinking its April 10th circular, even if it's by a little bit. 3 people in know have told Bloomberg Quint that the HR Khan headed panel has already submitted a list of draft recommendations that look to rationalize the norms. Jayashree Upadhyay joins us with the details. Now, Jayashree, what are the recommendations and how do they stack up versus the April 10th circular?
Now, just to make it very clear, right now it is a draft regulation. Yeah. It has to be submitted to the market regulator. Only then will these regulations be amended. Now, if you understand clearly, the kind of concerns that the market had was over the NRI fund managers, person of Indian origin, and the overseas investors. They could be barred from being a part of the foreign portfolio investors. Now, those are some of the concerns that the HR Khan panel is considering. Now, first and foremost, as far as the NRI fund manager, if they're coming up from the FATF compliant jurisdictions, those may be exempt from the effects of the 10th April circular.
Can you simplify this for us?
Of course. So FATFs, if you understand, FATF is comprised of 37 jurisdictions. So Mauritius will still not be a part of it. So any NRI fund manager who is coming from Mauritius will still be a part of the list, which is not going to be allowed to be a part of the FPI managers. Now, person of Indian origin are typically those kind of investors who are not an Indian passport holder, but of course had a lineage of someone or the other who is an Indian. So that is the reason why, typically because of these fund managers do not go and ask them, okay, are you a person of Indian origin? And that is the reason why the Khan panel is considering that whether person of Indian origin, because they are not exactly Indians, should be exempt from the contours of the 10th April circular. And now the last one was about the clubbing of the limits. Now, clubbing of the limits typically what means by 10, mostly it's a foreign portfolio investors about 10%. Now beyond 10% becomes an FDI. Now, because of the clubbing of these limits, it could have led to a breach of that 10%, and many of these NRIs and PIOs would have had to shut off those kind of limits, and that could have led to a huge bit of selling off in the market. So that is again something that the Khan panel is considering. So that could have been exempted from the 10th April circular of the market regulator. Now, even as we are speaking today, again the Khan panel is supposed to meet, and AMRI, which is the Asset Managers Roundtable in India, they have been asked for representation. And
okay.
Yes, so if you remember correctly, these were the ones who really raised a grouch against those recommendations of the market regulator on the 10th April circular. So now at least those representations will also be heard before the market regulator concretely considers what has to be amended and what not.
Okay, so that's interesting. So a couple of recommendations that the panel has already submitted. The AMRI panel gets, the HR Khan panel has submitted, the AMRI panel gets a chance to represent their case today before the HR Khan panel, I would presume.
Yes.
And then some further recommendations could be made.
Could be made, yes.
Okay, that sums it up really well. Lakshmi, thanks for putting this into perspective. Sure. This has been the talk of town the last couple of days. Hopefully, if at all this frayed some nerves, maybe this moves could soothe those nerves as well.
Yes.
Okay, great. Thanks for putting this into perspective. Well, you know, this story from Bloomberg Quint, which got filed day before yesterday at about 2:30 p.m. market hours, has raised about quite a bit of conversation. Let's see if there are further updates come in which soothe the frayed nerves, as I said. Okay, the next piece on First Word and the ongoing saga. That's the only way I can put this. Another business family feud has made its way to the Indian courts. The Singh brothers, the heirs to that multi-billion-dollar pharmaceutical giant Ranbaxy, founders of Fortis, founders of Religare, seem to be parting ways. Now, what's happened? The latest in this saga is that Shrivinder Singh has moved NCLT against Malvinder Singh and Sunil Godwani. The case alleges mismanagement of RHC Holding, Religare, and Fortis. What's the current status, by the way? From everybody who is a stock market watcher, that Fortis and Religare are being investigated by various agencies for alleged financial improprieties. Keep that at the back of your mind. And what is the latest development? As I said, that the court has, Singh Vishnu has moved NCLT. What does he say when he's doing this? There are 2 or 3 quotes that we've taken out of the statement that came out from Shrivinder Singh. He's saying, I took public retirement to my spiritual home, Bias, to serve my master in 2015, leaving the thriving company I founded in trusted hands, quote unquote. And in a period of less than 2 years, it has moved towards disintegration and ruin of a national healthcare asset. He goes on to say that the collective ongoing actions of Malvinder and Sunil Godwani led to a systematic undermining of the interests of the companies, their shareholders, and loyal employees of the group. And he, of course, says that I can no longer be party to the activities in which transparency and ethics are continuously and consistently negated. It's come to a point where this means that I am now disassociating from my brother as a business partner and will be pursuing an independent path going forward. Now, which way and shape and form this takes place, I don't know, it's anybody's guess. But what does this do? And I think in a nutshell, the saga in a nutshell is really this. Malvinder Singh points a finger at the family spiritual guru. Shrivinder Singh points a finger at Malvinder. Regulators have deterred on taking an action, and as a result of that, shareholders are the ones who suffer. Now, think about it from a perspective of a Fortis shareholder or a Religare shareholder who's now left in the dark about what will happen. Will this have a material impact on the stock prices of both of these entities? I doubt. This thing will not necessarily move the needle on a Fortis Healthcare in a meaningful way. But does it keep a cloud over the fortunes of both of these companies in light of the fact that the 2 promoters who have been associated with these companies for time immemorial now are washing dirty linen in public? It doesn't really do service to shareholders, and you don't know which way this will take shape and form, because if you look at the social media, to be honest, everybody said that now all it takes is for the spiritual guru to now come and point a finger at somebody else, because both Malvinder and Shrivinder have already done that. So, well, not the best turnout for minority shareholders of Religare as well as Fortis, and whatever shareholding is left with Malvinder and Shrivinder is anybody's take, really. But this may not be the end of it, and it's just washing dirty linen in public, which will not be good for minority shareholders for sure. But this is the saga, and you can read more about this on Bloomberg Quint since last night. There are ample stories that are filed. The whole text is there on the Bloomberg Quint website as well. So our edited version and the full text right there on BloombergQuint.com homepage. Do log in and read more about this. The third piece is on Adani Enterprises, which has set September 7th as the record date for the proposed demerger of Adani Gas. Shareholders will get 1 share of Adani Gas for each share held in the parent. As per the terms of arrangement, this also means that whoever owns shares of Adani Enterprises at end of day today will be eligible for the issue. So what's Adani Gas going to house, and how does it stack up against its peers? Samit Sarkar's here with the answer. Good morning, Samit.
Good morning, Neeraj. So if you see, Adani Gas is the city gas distribution unit of Adani Enterprises. Currently, it has operations in only 4 geographical areas, 2 in Gujarat, 1 each in Haryana and Uttar Pradesh. But so it's a small company so far. But here's the interesting thing. In the recent city gas auction, the company won the most number of licenses. It's bagged licenses for nearly 13 areas on its own, and its joint venture with Indian Oil Corporation bagged licenses for additional 9 areas, taking the total city gas areas to around 35 for the company. On a standalone basis, it has licenses for 17 areas, and its JV with Indian Oil Corporation has licenses for 18 areas, 9 that it won in the recent city gas auction and 9 that it already had. But those 9 are still not operational. So on the back of this 35 licenses that the company has, it is expecting its total sales volume per day to rise nearly 8 times by financial year 2025. So you can see the kind of growth prospect that the company is expecting. Now, Adani Gas would have only 3 listed peers in India. First is Indraprastha Gas Limited, Mahanagar Gas Limited and Gujarat Gas Limited. Now if you see over FY14 to FY18, Adani Gas's revenue saw a degrowth of around 4%, but that was because of slower expansion that the company had done in the past years. But if you see on the operational side, its EBITDA recorded a growth rate of around 21%. It is the highest it has seen among its peers, and it is because of operational efficiencies and because of lower raw material prices. Also, its net profit grew at a higher rate when compared with Indraprastha Gas and Mahanagar Gas. It recorded a growth rate of around 38%. Now for Gujarat Gas, you can see a growth rate of 79% over FY14 to FY18, but that is because of a low base. Now, if you see on the operational side, the company's total sales volume per day, now that increased only 4.3%, which is at a lower rate when compared to its peers, and that is because of the slower expansion of the company. But its unit metrics, that is EBITDA per standard cubic meter, now that grew at a rate of around 16.5%, again highest among its peers. However, the company is still very small, and you can see that clearly on the Q1 numbers of the company. Now, if you see the sales volume per day that the company did in the June quarter ended, it was just 1.4 million metric standard cubic meter. That is nearly half of what Mahanagar Gas does and less than 1/3 of what Indraprastha Gas and Gujarat Gas does. But on the operational side, again, it is one of the most profitable city gas distribution company, as it earns nearly 8 rupees per standard cubic meter on the operational front. Now, if you see on the balance sheet side, the company's total debt on the books for financial year 2018 was close to 300 crore rupees, but that's not much of a concern because its leverage ratio is less than 1 time. So here Indraprastha Gas and Mahanagar Gas are debt-free companies, and Gujarat Gas, which is a government company, has a debt of around 3,300 crore rupees. This is the total debt, and its leverage ratio is 3.8 times. But for Adani Gas, given the kind of expansion plans that the company needs to do for the areas which are not yet operational and for the existing areas, this number could rise going forward.
Interesting. And is there an estimate, Sumit, on what the listing price for Adani Gas could be?
So there are only 3 listed city gas distribution companies, and the average valuations for these 3 companies for financial year 2019, on price to earnings they trade 20 times. On EV to EBITDA, they trade at 11.5 times, and on price to book, they trade at 4.3 times. So applying backward calculations and on analyzing the Q1 numbers for FY19, according to our estimates, the base case price for Adani Gas could be in the range of 35 to 40 rupees. Now, if it lists at a premium of 20% given the growth prospects that the company has, then the listing price could be in the range of 42 to 48 rupees. And if it lists at a discount of say 20% because of the capex that the company requires going forward, then the listing price could be in the range of 28 to 32 rupees.
Well, let's wait and watch. But thanks for putting this into perspective, Sumit. First of all of you who are shareholders and want to know, or who are not shareholders and want to know whether it's worth buying into Adani Enterprises for getting that stock of Adani Gas, well, here's Sumit with an answer. Thanks, Sumit, for putting that into perspective. The next piece on First Word, the record rally witnessed in Indian equities in August has also turned some analysts cautious, especially since they have had to temper their EPS forecast for FY19. If you look at the universe of stocks tracked by at least 5 analysts on Bloomberg, there have been more target price downgrades than upgrades in the month of August. Jayesh Kinani is standing by to show us the trends. Now, Jayesh, I tend to get confused because we spoke about trends post-earnings season. We spoke about downgrades and upgrades post-earnings season. Now we're trying to put into perspective the changes that have happened post-August.
That's right.
Have there been material changes out there?
There have been, Neeraj. So what we've done before this was primarily on the EPS estimates for FY19. But this time around, what we've done is, how the analysts have reacted to the entire earnings season and how they have, in fact, tempered down their target prices when it comes to their forward estimates. So, we are looking at that universe. So, there are about 406 stocks which apply to this universe, which is tracked by at least 5 analysts, and they have target prices available. So, what we did over here was 51.5% of these stocks have seen an analyst downgrade, which means that, out of 406, nearly 52%. And remember that in the month of July, when we had done a similar story, this number was at about 58%. So the analyst downgrades have in fact accelerated. When it comes to the upgrades, we have just about 40.4% of the universe which has seen an upgrade, while 8.1% of the stock's target price remains unchanged. Now, in terms of where the sector upgrades and downgrades have come in, we tried to look at that picture as well. So consumer staples, utilities and healthcare are the only 3 sectors where the analyst target price has been revised. And of course, now you'll say that consumer staples is the surprising one over here, especially that yesterday we did a story in which there was a huge downgrade, or there was valuation concern. But I was looking at some of the finer details over here, Neeraj. Barring Britannia and Dabur, if I remove those 2 stocks, then this number goes down significantly, in fact negative as well. So it's 2 stocks that have actually brought this 6.3% upgrade for the consumer staples. Utilities, of course, 1.3% target price upgrade for those stocks as well. And this morning we have seen Credit Suisse come out with a note in which they have upgraded utilities as well, followed by healthcare, and then financials. This downgrade starts from here, which is the bigger universe of stocks as well. 67 stocks belong to the financial space, and on an aggregate they have seen a 0.1% downtick on their target price. And we have materials as well, 0.2% downgrade. But as we go on to the other sectors, there are bigger downgrades which have come in, for such as the industrial space that has seen a 3% downgrade in the target price. Communications, energy, consumer discretionary and technology as well. So more downgrades than upgrades that we have seen in terms of not only the stocks but also the sectors on the whole. Now, if you look at some of the top upgrades and downgrades that we have in terms of individual stocks, we have Orient Refractories, Vinati Organics, and mind you that this time the names are more from the mid-cap space. We have Dabur India that I was talking about that has seen a 15% upgrade in its target price. Graphite and Page Industries. Page Industries, of course, we have seen that the stock has in fact clocked record highs for itself in excess of 36,000. So that too was one of the analysts' favorites, and they have upgraded the stock. In terms of downgrades that we have, the top 5, if you have a look, Asian Granito, that leads the list, 44% downtick in their target price in the month of August. We have Hathway Cable, 35% lower. VST Tillers, Jet Airways and Skipper, these are the top 5 which make the list. And have a look at the downgrades that they have seen, anywhere in the range from about 22 to 44%. But the crux of the story, Neeraj, remains that analysts are now, tempering down their expectation in terms of target price as well. And there have been more downgrades than the upgrades for at least a second month in a row.
Well, the interesting bit would be what happens to the stocks in the event of a market meltdown. To the ones which have seen an upgrade, will they be able to withstand the selling pressure or no? Jesh, thanks for putting this into perspective. This is the latest. It's September 5th, and we've told you what the consensus upgrades and downgrades have been as per the Bloomberg data available with us. The last piece on First Word, as Amazon became the second US firm to hit $1 trillion value on the stock markets, founder Jeff Bezos regained the crown as the richest person on the planet. Bloomberg's Tom Metcalf and Emily Chang discussed just how much some of the prominent investors are now worth.
It's been absolutely incredible. I've been watching it for those whole 3 years, and he's now got a $160 billion fortune, which was big enough at the start of the year at $100 billion. And you go back a few years, it was sort of in the low tens. So and that's basically been exactly tracking Amazon's share price, which is up, I think, 74% alone this year. For a company of that size, it's pretty unprecedented.
And it's not just Bezos, but his family, who has also made out, I believe, both of his parents invested in the company, his siblings invested in the company. To what end?
Yeah, it's, investing in Amazon as early as they were able to. This is sort of at a share price of 20 cents a share or something, and you're now looking at over $2,000 a share. It's one of the all-time great investments. So as a family, they need no more assistance, I think. They're just trying to work out how they can give away their money fast enough to keep pace with this this great growth.
How does the speed with which they've accumulated this wealth compare to, other very wealthy founders like Mark Zuckerberg, like the founders of Google, like Bill Gates?
In terms of the absolute numbers, there's no comparison. So Jeff Bezos is actually the richest person in modern history. So you go back to what Bill Gates was doing with Microsoft in sort of the early 2000s. He did hit $100 billion. That would be worth in sort of real terms today about 140, 150 billion. Bezos is blown by that. And in terms of just sheer billions being accumulated, there's really nothing in history to compare.
So, Tom, what are the risks here? He's got a lot of money. He's investing in a lot of things. He's got his philanthropic efforts. He's got his space company, Blue Origin. What are the risks once your fortune gets so large?
Well, the biggest risk for Bezos is he's just not diversified at all. Something like more than 95% of his fortune is in one stock. So in the case of Amazon, this has worked out perfectly. But when I speak to wealth advisors, they would have their head in their hands for an ordinary kind of wealthy person. They would be begging them to, hey, sell more stock, which Bezos really doesn't do apart from to fund Blue Origin, which is probably one of the few riskier things you can find out there. That is a space exploration company. So that's part of the reason he's had such mammoth returns. Just purely from a risk-reward perspective, it's very, very risky.
That's all that we have on First Word today, but lots more lined up on Indian Open. We discuss the emerging risks of the global economy and markets, from trade tensions to crisis in Turkey and Argentina, a conversation with Peter Oppenheimer of Goldman Sachs, and then discuss Muthoot Finance's first quarter earnings with Managing Director George Alexander Muthoot. But after this break, full tilt towards the day's trade.
The heart wants what it wants, and mine has led me to some amazing highs and lows as I followed its guidance from software development to investment banking and then into my own startup. I'm Ahmed Aftab Naqvi, and my journey has been a roller coaster ride. When I started my company with a single laptop in a garage and 2 friends armed with just the burning desire to create something, I had no idea that we would create a whole new paradigm of marketing. Today, Gozoop is at the forefront of the industry, a thought leader in the space, and voted as one of the best places to work for in India. But we didn't get there quickly. But everything taught me and engineered our success. It's an interesting story, and I'm really looking forward to sharing it with you.
Agons of business never stop. Only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
They're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Good morning to all our viewers. You're watching Indian Open right here on Bloomberg. Quaint. Before we move on to see what's our setup looking like, let's quickly look at what's happening in the Asian markets into with what the US did. You've got the Nikkei 225, which is down about 1/3%. So almost the third, fourth day of trade where you're seeing some bit of weakness coming in. Early morning trade probably carrying on till the end of the trading session. 1% cut for the Hang Seng. The S&P 500 also dipped below that 2900 mark, which it reached just a few days ago. So not being able to hold on to those gains for the US markets as well. Taking a look at the SGX Nifty, the undertone seems to be a bit more negative this time around. The morning session 0.25% lower on the SGX Nifty. That's 11,556. So the start could be slightly wobbly this morning. For us, yesterday was a session where towards the end of the trading session, you did see that weakness and the tumble coming down on the index, not just on the index because of the currency. The entire broader market also witnessed a lot of pressure. And by the end of trade, there were a handful of stocks that stayed positive in the F&O segment. Agam is joining in right now to take us through what happened yesterday and how are we set up for trade, at least from an F&O standpoint. Agam.
Right, Devina. So we've started to see the Nifty inch downwards, but day by day we see a few points cut, and yesterday wasn't any different. We saw about 0.5% cut coming through when it comes to the underlying, and along with that, there's very little change in open interest. So, where there were expectations that there would be an accumulation of shorts, at this point in time, there really isn't that much, but that could change any time. When it comes to the Nifty Bank futures too, we're seeing, this is where we're starting to see a little bit of accumulation towards shorts, considering a 1.5% cut on the Nifty banking futures. When it comes to some of the other variables like the India Volatility Index, again, that's something which has climbed up now comfortably above the mark of 13.5, and this is where a lot of your analysts are suggesting that could be a matter of concern, especially if it goes above the mark of 14. When it comes to changes in open interest, as one might expect, we have seen a lot of activity around the 11,600, 700 mark. But we're starting to see writing surprisingly around the put of the 11,500 and, well, more writing around the 11,800 call, which means that we're unlikely to see the Nifty breach that level anytime soon, at least in the near future. Let's also talk about some of the other stocks, and we do have Adani Enterprises as a new stock which is in the F&O band. We're expecting restricted trade there. Nifty put call ratio, of course, at around 1.45 against 1.47. In terms of other stocks, we're keeping an eye on Balakrishna Industries. Now it's moved down below the mark of 1,200 with more shorts adding into the system. 31% added in open interest. Sun TV is the other one which has come off quite substantially, down 7%. Open interest increase of around 11%. And Dabur India, of course, along with the rest of the FMCG pack, has seen some more weakness. So we're seeing shorts there as well. I'll be watching out for some of these FMCG names, considering we have seen, well, some downgrades coming in from a lot of these brokerage houses, and of course Motherson Sumi is the other one which has also moved back below the mark of 300. So, well, shorts all around. Can we expect this weakness to continue? Let's wait and watch.
All right, Agam, thanks very much for that. That's the F&O setup for trade. The other aspect that we need to keep an eye on, other than the fact that we are seeing that the currency weakening, is what's been happening in crude oil prices. They've come off from the recent highs as investors take stock of the changing stockpiles in America. The world also awaiting to see the final outcome of the sanctions proposed on Iranian crude. So should we expect crude to continue to hover around the current levels? Joining us now to answer that question is Vandana Hari of Vanda Insights, who's joining us right now on the phone line. Vandana, thanks very much for taking out the time this morning. While we have seen prices coming off in the last few days, but still on, from a yearly perspective, you've got the Brent and the WTI crude already up by about 15-16 odd %. What is your take on what the prices can do from now?
Good morning. Thanks for having me on your show. Absolutely. We've seen Brent go down to near 70 levels. when the market was in the throes of worries over, especially over the China-US tariffs war. And we've seen it bounce back quite smartly in recent days, back up towards, it was making its way almost towards $80 yesterday, as the market was a bit worried about the tropical storm Gordon in the Gulf of Mexico. So if you were to take a few steps back right now, what's happening in the market is, I would say, a couple of major forces on the opposite sides. One is, of course, supply worries, and these are only going to increase as we get closer to the November 5 implementation of U.S. sanctions against Iran. Iranian crude production and exports have already started slipping in the past couple of months. So that has come back to the center stage of the market, obviously. But at the same time, the overall worries, it started out with concerns about Chinese economic growth, Chinese oil demand growth. But it has widened over the past few weeks. You know, we had Turkey, we had Argentina. The latest news overnight, South Africa has slipped into recession. So the contagion fear over emerging markets' economic performance, it has lined up on the opposite side of the supply fears, which is making some wonder, you know, if demand growth will be as robust as had been expected until this year. So we're going to see a seesaw sort of movement in prices in the coming weeks between these two opposing forces.
You know, aside from the fact that you could see pressures in terms of export losses from Iran due to US sanctions, there are other parts as well, which is production decline in Venezuela. There are some episodic issues and outages in Libya. Do you see any offset to this supply dip, if at all it happens in a meaningful way?
That's going to be extremely tricky. And in fact, that's what is concerning the market more than simply Iran. Because if you were to factor in, let's say, 1 million barrels per day of Iranian exports disappearing from the market, and then you weigh it against the 1 million barrels per day that OPEC, non-OPEC decided to increase in terms of their production, you would think that, okay, you know, that's pretty much going to offset. But what is really worrying the market is that will OPEC, non-OPEC, especially with its diminishing spare capacity available, will it be able to offset, let's call it 1 million barrels per day disappearing from Iran? And on top of that, very steep continuing slide in Venezuela. Now, Angola and Mexico are also two other countries whose output is declining, but Venezuela is a major concern. And then, of course, as you quite rightly mentioned, we don't really, the market doesn't need reminders about Libya and Nigeria being very vulnerable. So on that front, the concern is what if that comes together? You know, Libyan, Nigerian outages come together with Iranian problems, together with Venezuela, and then OPEC and non-OPEC might be, running on fumes at that point.
Just one last quick question, Vandana, before we let you go, in terms of your projection of crude oil prices by the end of the year.
Always a tough call. Look, I think 70 to 80 band has been sort of established as a balancing point, if you will, between the various bullish and bearish forces that have been at play this year. I do feel the Saudis will do whatever they can, despite the increase that they pledged. They have been reining back when they think the prices are getting pressured down. So I think the Saudis will want to maintain a floor at 70. Could it cross 80? I think that's the big question right now. I think if all of those worst-case scenarios come to pass, more than 1 million barrels per day Iranian crude disappearing, and Venezuela problems, Nigeria, Libya problems, and any other unforeseen outages, which happens every once in a while as well. We have North Sea, Canada, especially as well. If that happens, it could start racing past 80 absolutely by the end of this year. I think, again, OPEC, non-OPEC will do their best to, and with Russia, to try and pump more if that does happen. I think they are going to do their best to not let it cross 80.
All right, Vandana, we'll leave it at that. A pleasure chatting with you this morning. Thanks a lot for that. So, possibility of an 80, breach of 80 by the end of this year, Vandana.
Well, that doesn't augur well for India, and primarily that key reason for what's happening to macros and for our markets as well individually. Avinash, Gorakshakar, head of research at Joindre Capital Services, joins us on the show. Avinash, it's well established that crude moving up higher will have an impact on markets. So, fine, that's done. The question is what happens to these oil sensitives now that the currency is also weakened so much? I mean, valuation-wise, I don't think you can doubt PPHP IOC, but the fact that crude is at near 80 and rupees near 72, does that mean more pressure or does it mean a lid on the upside for these companies?
I think it obviously means some resistance on the upside, and if crude does cross $80 a barrel and the rupee continues to remain weak, our sense is that you could see obviously the GRMs getting weaker at least from the second and third quarter onwards. Some amount of inventory gains could possibly come in because some amount of inventories should be there with most of these oil marketing companies. But I think the real impact possibly could be felt in the second half of FY19. And I think more than the oil marketing companies, Neeraj, airline companies typically which actually are hit both ways, both on the crude oil price front and the rupee depreciation front. I think we could see probably some sort of weakening numbers further going forward, especially if you look at Jet, the kind of numbers the company has presented. I think they have a cash crunch, their operating cash flows are pretty weak, so clearly within the airline pack, Jet could possibly face little more pressure, and obviously all the airline companies, one could see some sort of earnings cuts, at least if this kind of trend, both the rupee and the oil price goes up.
Since you're on the topic, by the way, Qatar Airways has said that they are very open to invest in Interglobe Aviation. Does that provide any kind of relief to the stock price of Interglobe Aviation or not quite?
I think, Neeraj, this is definitely a sentimental booster, but at the end of the day, I think it's pure economics. If the crude price and the rupee depreciation goes together, I would not be surprised that the markets could possibly look at this factor more seriously rather than the Qatar factor, because obviously, Indian airline market is a very large market. We have seen investors like Etihad now coming into Jet. So obviously, if this happens, I think the markets would like to know what kind of valuation and what kind of capital does the foreign partner gets into the company. Definitely a long-term positive, but in the near term, these two worries would be more important than this factor.
But if a person is taking a long-term view, then these price levels, do they attract you?
I think there's no hurry, Devina, to get into these stocks. I would believe that the kind of headwinds we are seeing both on the rupee as well as on the crude oil price front, I would believe that probably it's too early to take a call on the airline sector. It's better to wait and watch, because clearly I would not be surprised that despite very strong airline traffic growth, margins of most of the airline companies are going to be considerably weak.
Okay. Margins will considerably weak and no hurry to invest into these companies. I think that's a safe argument. What about some of the other stocks in news? We've discussed about crude and the sensitives there. What about the other key companies to focus on? Let's get in our research team to speak about all the key newsmakers today. Some brokerage views as well, particularly on FMCG2 coming out. So Shraddha, Agam as well as Salonin here to talk about that. Good morning all three of you. Shraddha, let's start off with you. The stocks in news, I presume.
Right. So Neeraj, Spark or Sun Pharma Advanced Research is one stock that we are tracking. They have shared the deadlines for the FDA to review 2 of their new drugs, which for Zelpros is November 2018 and Ellipsia is January 2019. Additionally, they've also said that they will be filing a NDA or new drug application for its cancer drug Teclantis in Q4 FY19. That apart, Indigo could possibly be in focus as well. This is on the back of reports that the Qatar Airways CEO has commented and said that he won't rule out any future opportunity for investing in Indigo. Nevertheless, he's also addressed Air India in his comments. That apart, your McNally Bharat Engineering, they've received a construction order worth 108 crores, sizable for the company given that the market cap itself is 340 crores. And finally, the promoter in MEP Infra Developers has picked up about 0.5% stake in a bulk deal, so some positive cue.
Oh, interesting. But yeah, I mean, that puts into perspective that Interglobe Aviation was not the only one that the Qatar Airways CEO was speaking about. So maybe a fluid comment about investing across the EM airline space in India in particular as well. Thanks, Shraddha, for putting that into perspective. Now, interesting note, Agam. I can safely say that we beat them to it. But no, we've been talking about the FMCG valuations for the last couple of days. Right. Credit Suisse note now puts that into perspective too.
Yes, Neeraj, and it's about time some of these notes start coming into play, because we have a Credit Suisse note on FMCG valuations, and they suggest that the valuations for a lot of these FMCG companies are overstretched. In fact, they have been for well over a year now. The reason is, of course, the strong fundamental re-rating that a lot of these companies have seen over the previous 6 months based on the kind of earnings that we've seen. But even if you disregard that, we have seen, that up move. And based on that, they've actually, downgraded Britannia and HUL to a neutral stance, and they say that they prefer Dabur, Nestle and Colgate. Talking about these two downgraded stocks specifically, they've downgraded Britannia to a neutral from an outperform, and they have, however, hiked the price targets to around 6,900, but this means that like no more than a 9% up move from current market levels, and they say that Britannia should ideally trade at a discount to HUL, and as we have discussed, it's one of the most expensive stocks in the FMCG pack at this point in time. Scope for earnings upgrade for Britannia is limited. The other one, of course, is Credit Suisse on HUL, and they have also downgraded HUL to a neutral from outperform. They've also lowered their price target to around 1770 with an upside of 7% from current market levels. They say that HUL has been quick to capitalize on gaps left by competitors, but margins expansion may be capped as we move into financial year 2021, and this is something that may work against HUL, but its valuations essentially, Neeraj, that's been a big concern for Credit Suisse.
Okay, thanks for putting that into perspective, Agam. And Muthoot Finance, I thought optically the numbers looked okay, Saloni. What did you make of them?
So I would say it reported extremely good set of numbers as you compared like say 4-5 quarters. The largest gold finance company in India in terms of gold loan portfolio, it reported its interest income up by around 18%, while net profits saw a growth of 43% and it stood around 492 crores. Net profit came in better than Bloomberg went expectations of 450 crore. This was largely on the back of lower provisions that we have seen in the quarter went by, while its loan assets grew by nearly 11% and stood close to 31,000 crore. After seeing muted growth in its core gold loan portfolio in the last 4-5 quarters, we have seen a double-digit growth of 10% in its gold loan portfolio, which crossed the 30,000 crore mark for the first time ever. That apart, if you see their asset quality, it has improved substantially. According to new accounting standards, it stood around 2.85% as compared to 4.42% sequentially. While talking about segmental performances, their home finance business did really well. We have seen a growth of nearly 170% in its loan portfolio, while insurance subsidiary did pretty well as we have seen the first year premium collection growing over 206% in the quarter went by, and net profits actually doubled for insurance business and it stood around 2 crores, Neeraj. So the stock may react positively today.
Well, let's wait and watch. And of course, we'll be hearing out from the management. Saloni will be in a conversation with them at 9:45 a.m. today. So that's something to watch out for. To Saloni, thanks for putting that into perspective. Avinash, come in on this. Muthoot Finance, the results look good. They will have a small issue of Kerala, or maybe a big issue with Kerala. I don't know. We'll talk about that with them too, to deal with. But the numbers optically look okay. Is it an NBFC that you would look at investing into?
I think, Neeraj, looking at the numbers, definitely, I think after 3-4 kind of reasonably good quarters, I think this quarter has been quite good, both on the income as well as on the bottom line side. I would believe that going forward, what's the kind of management commentary, especially in this quarter, especially after the Kerala incident happened, how have they been affected? But overall, I think, this being a one-off kind of quarter, if the loan book growth and the disbursement growth continues, I would not be surprised that you could see a lot of re-rating on the stock, considering the fact that their asset quality has been pretty stable, and as long as they are able to grow in double digits on the disbursement growth, this is definitely one of the big players in gold finance. Typically this is a big market for them, Kerala. So how they actually recover out of it and how the second half actually looks at, I think is going to be more important. The markets would obviously look at whether there could be a stronger bounce in the third and the fourth quarter after possibly a poor quarter in the second quarter.
All right, Avinash, just stay on with us. 400 from Muthoot Finance. That's Avinash's call on the stock. Let's get in our technical experts now. Gaurav, Bissa and Chandan Taparia, they're both joining in right now to take us through some stock ideas as well as what the index is likely to do. I'm going to start off with you, Gaurav. After yesterday's down dip that we are seeing, we momentarily breached that 11,500 mark on the index on the downside. Probably towards the end, pull back a bit. But what's the sense now? More selling pressure likely?
Good morning. There are 2 or 3 things that one need to take into consideration if you talk of the derivatives front. If you look at the option data, 11,500 put option come on at a very high concentration. We almost violated those levels yesterday, though we saw a small bounce back sort of coming in. But if we continue to trade below 11,500 levels, there's a possibility that we may see some more pressure, and the index may drift towards the level of 11,380 and even below those levels. If you look at the technical charts, you'll see another factor coming in. One day before, we saw a bearish engulfing sort of pattern forming on daily charts. It has now retested the levels of 11,500. These were the earlier breakout levels where we saw strong momentum building up, so to speak of. So 11,400, 11,500 has a quite significance. If Nifty trades below 11,500 or 490 for that matter, there's a good possibility that we may head towards the level of 11,380 to 11,650 in next two trading sessions.
All right. Chandan, what's your sense on the index?
Yes, good morning. Happy Teachers Day to all, those who help me to be better in the life. Looking at the market, that is the biggest teacher for everyone. The market, which was continuously making higher top, higher bottom formation, has now taken a pause in the positive momentum. Earlier it was respecting to its rising support trend line, and recently it has broken the support of 11,620. That's why we have seen a decline in the market towards 11,500. We have also seen a jump in the volatility index by around 10%. So a spurt in the VIX with decline in the market and cold writing activity indicates some pause in the positive momentum, or a small dip could be seen. However, highest OI on the put side commands at 11,500, but the cold writing is also visible in the market. So as of now, till it remains below 11,620 zone, we are expecting further weakness in the market, which may take it to 11,450, 11,420 kind of level, which will be the meaningful support for the market. But yes, as of now, the way it is formed, the bearish engulfing on the weekly has been forming the bearish belt on the daily from last 2 days, broken the support. Better to go with the hedging activity till it remains below 11,620. So suggestion will be trade in 11,500 put on bounce back move near to 100 rupees, put stop loss of 75, and this put can move to us 140 to 150 levels.
Okay, gentlemen, stay on to our special segment, Bloomberg Edge, wherein Jayesh Kilnani tells us about a pattern that the terminal is throwing up on a stock. Jayesh, what's the stock on your radar today?
Morning, Neeraj. It's Motherson Sumi, and that is because yesterday not only broke below the 50-day moving average, but is continuously trading below the other key moving averages as well. Not only that, Bloomberg's proprietary fear and greed indicator also turned negative, thereby signaling a sell signal on the stock. Now, first, let's have a look at the fear and greed and the conditions that you have to watch out for in theory. It's a proprietary Bloomberg indicator which uses the spread of two weighted averages of the concept of true range, and that is one of the key inputs that goes into calculating the fear and greed. Because it oscillates on a zero baseline, it becomes very simple to interpret. You have to follow the color to get your buy and sell signals. Red is indicative of sell and green is indicative of buy. So you have to watch out for a change in the color. Let's have a look at the chart of Motherson Sumi. Now, what you have on the chart over here is, somewhere close to just below the 300 level is the 50-day moving average. And yesterday, this big candle that you see, it in fact closed below that 50-day moving average. The bottom panel shows you the fear and greed indicator. If we zoom into this, we can see that it has changed colors from green to red, which means that there is a sell signal in place for Motherson Sumi. So, going ahead, there could be more weakness for the stock.
And efficacy of this indicator for Motherson Sumi individually, Jayesh?
Neeraj, works very well in the past. If you had traded all the sell indications, over the next 10 days, the average profit on each trade was about 3.7%.
All right, Jayesh, thanks very much for that. So do keep an eye out on Motherson Sumi. We've got more stock ideas from our guests, Gaurav and Chandan. Chandan has got a buy on HCL Tech and he's got a sell on Escorts. And Gaurav's strategies are on Mindtree and McDowell's. Let's start off with you, Gaurav, on your calls.
The first recommendation today would be Mindtree. It's looking quite interesting. If you look at the overall IT space, this is the only saving phase or saving place for the markets, and it was the only index that was quite positive yesterday. Coming back to Mindtree, it has been trading in a range. It has given a breakout on daily charts, a bullish flag pattern breakout, a very strong breakout. If you look at the open interest data, about 5% long position is seen getting built in an otherwise weak market. So this indicates that there's a lot of buying interest that is emerging in the name. 1100 call option come under very high concentration. It has closed above these levels. That's the third aspect that we are looking quite positive in the name. One can buy in any dip towards the level of 1115 to 1110. I'm talking about the futures with a stop loss of 1100. One can buy for minimum target price of 1150. And the second recommendation would be on McDowell. It's been seeing unwinding from the levels of 635, 640, and yesterday also we saw some amount of unwinding happening. It has given a breakdown from the upper sloping channel pattern, and the supports are now seen at 585, 595, 590 kind of levels. I would recommend selling at a little bit higher levels of 6 and 12, or just about a percentage points higher. With a stop loss of 619, one can short it for target price of 598.
Chandan, your strategies?
Yes, first buy on SCL Tech, as my friend Gaurav mentioned, that we have positive view on the IT counter, and depreciating rupees definitely supporting the selective IT stocks. So that is going to be theme for next couple of days. Like Mindtree, SCL Tech is also holding the gains. TCS is also doing the similar kind of behavior. So I have selected to go long on SCL Tech because of the open interest and data and continuous formation of higher tops, higher bottom on the weekly scale. Yesterday when market fell down, this stock also managed to hold its gain beyond 11,070 zone. And now it is approaching to us the fresh lifetime high. It surpassed the previous high of 1,077, and now expecting the momentum to continue, which may take it to 1118 kind of level. So recommending to buy with stop loss of 1058 for the higher target. Second trade on the buy side is SDFC Limited. What we believe that this stock, which remained under pressure for last couple of days now, had gone into the consolidation band. It is respecting to its 50-day exponential moving average from last 2-3 trading session, and all set to surpass its falling supply trend line. Even after the consolidation, we are witnessing the shift in the support. So because of that, some up move could be seen, which may take it to 2,090 kind of level. So one can buy with a stop loss of 1920. One sell trade, that is on Escort. We have seen selling pressure in most of the auto, FMCG and PSU bank counter. And Escorts has given a breakdown. It has broken the major support. However, already it has seen the correction of more than 100 points. But the completion of head and shoulder pattern, rounding tops, breaking below its 50-day exponential moving average, built up of shorts, all indicates that further weakness could be seen, which may take it to 770 kind of level. One can sell on bounce with a stop loss of 820 levels.
All right. Avinash, anything that you feel is setting Mindtree apart from the rest of the mid-cap IT basket? Do you see that as a promise there in the stock price?
No, I think smaller players like KPIT, or for that reason, typically, persistent systems. I think we could see definitely a stronger traction in the second and third quarter numbers. Not only would currency, headwind actually help these companies, but the kind of order book and the kind of performance in the first quarter. I would believe that KPIT definitely deserves to be re-rated, and clearly Persistent has been following a product strategy. I would believe that any dip in these stock prices should be actually used as a good opportunity to enter these stocks. Overall, I think the IT pack should definitely do well, considering the fact that we could see a little bit of margin upside, considering that the currency has now depreciated, and obviously some amount of pricing gains could come to these companies.
Interesting. Yesterday, amongst the companies that fell quite strongly, Avinash, were the FMCG names. Now, enough and more brokerage notes are out as well. Yeah. But if you were an investor into an HUL or a Britannia, or for that matter, a Nestle, would you take some money off the table?
I think, Neeraj, these are stocks which have a scarcity premium, and clearly if you have a short-term horizon, I think obviously you should take the money off the table. But if you are a long-term investor, I would believe that any weakness should be used to actually buy into these stocks. I would believe that Britannia, or for that reason Nestle, were already quite valued at a significant premium. So some amount of profit booking could come in. I would believe that stocks like Marico, or for that reason Godrej Consumer, these are good choices to actually switch over. But overall, I think if somebody to take a longer term call, I think these have been stocks which have been actually favorites from the consumption theme. And I would not be surprised that the second quarter is also going to see a very strong volume growth quarter, especially for Lever, for Dabur. So you could see continuation of these price levels. Maybe some correction could happen, but I don't see a panic sell-off.
While we're talking about HUL and Britannia, just pop in ITC as well. I mean, the stock comparatively to the others is not performed as well from a year-to-date basis. But now that you're seeing global tobacco companies and stock prices seeing a bit of a fillip and a boost up, do you see that reflecting on ITC as well? Because they're doing okay even on the volume side.
No, I think clearly, ITC has been one of those FMCG companies which has been a slow mover. But if you see the stock price performance, it has also delivered in the last, say, 3 to 4 months. So I would believe that, yes, clearly from a relative valuation perspective, ITC still deserves to be actually held on. I would not be surprised that even in these kind of markets, it gives a fair amount of comfort. And the markets are clearly, looking forward to the fact that volume growth on the cigarette business could now get into positive territory, and that could actually, help the company at least in the near term, because a large part of the operational EBITDA still comes from the cigarette business.
Okay. Okay, we'll talk about Prakash. Actually, we have quick 20 seconds. Avinash, if you track a stock called Prakash Industries, there is a query on that?
I think clearly,
quick 15 seconds, please.
Yeah, I think one could definitely look at a better second quarter, because sponge iron as well as the PVC price, product segment should definitely do well. I think clearly, despite the fact that the stock is an ASM, I think one could definitely expect a reasonable risk-reward ratio over the longer term.
All right, we've got 18 seconds left to go for market pre-open, so I'm going to quickly take a look at the Asian market setup. Remember, this morning it's been a bit of gloom across the board, even for the US markets. The Asian market setup doesn't seem very promising. So you've got the SGX Nifty also seeing a bit of a dip of about 0.5%. So that's the Nifty, as well as the Sensex for you, up in trade today, but you will see those prices cooling off in just a few moments from now. 11,609. We should start pulling up the individual Nifty movers. Take a look at what the banks are doing, take a look at what Reliance is doing, the bigger names there, Infosys, TCS, SBI, which is the open lower in the session this morning. Reliance Industries still holds up in trade. That's gone back in the red now. TCS at 2100, Infosys at 740. You can pull up HDFC Limited as well, and that will show you the kind of mood that we've set up. So you've got a slight bit of an even Steven move right now in pre-open. There are a few stocks which have opened up in the green. ICICI Bank is up in the green as well. Axis Bank marginally in the green, flattish actually, 642 in early morning trade. So yes, Bank sees a bit of a dip, 331 on the stock, which is down about 0.7%. But we'll have to wait for these prices to cool off. HUL, remember, we've been seeing how the stock has been declining over the last few days. That stock is down in today's session as well. But ITC at 310, which is up about 1/3%.
Interesting movers there. Bring up what's happening to some stocks in news. So Muthoot Finance should come up on your screen. The numbers looked okay, but in a day when the markets are starting off lower, don't know how much of a reaction it can show. For now, it looks like it could start off marginally higher in trade. What else? Well, HCC, I don't know if it'll have that 5% uptick or no. Looks like it'll start off well. Sun Pharma Advanced Research, no, don't look at these rates. Don't look at this 20% downtick on Sun Pharma Advanced Research. Yeah, it's corrected itself. It is a stock in news, given some timelines about some of the drugs, but nothing too material. GVK Power and Infra corrects a little bit. Looks like correcting a little bit. So do Future Retail and Godrej Properties. And what looks like maybe starting off on a good note, maybe an SRF, maybe a Hathway. The last couple of days it's had a good move, so do watch out for that. And CASC has been amongst the top buzzers, both on the upside and downside. It's really hasn't given too much of returns, but almost every second day it pops up in the list of the high movers. Let's wait and watch. Sanofi India has some 13.5% uptick, so that's something to watch out for as well. And yesterday's losers, Network 18, TV18. TV18 looks like starting off on a slightly higher note today. The currency and the bond yield should come up on your screen. Some bit of green on the currency, I presume. I think much needed as well, but 71.43, well, about 12 paise, really nothing too much. The bond yield should come up on your screen, slip below the 8% mark, 803 now and counting. So the bond yields continue to harden. Okay, before we move any further, let's get in Samit Sarkar with the top brokerage calls for the morning. Samit.
Good morning, Neeraj. And the big brokerage calls for the day, first we have is Nomura on Cochin Shipyard. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 534, which suggests a potential upside of nearly 28%. Now, Nomura sees a strong medium-term visibility on the company on the back of the defense orders and on ramp up in the ship repairing segment of the company. Now, on the back of this, the brokerage is expecting the company's overall revenue and net profit EBITDA to grow at a compounded annual growth rate of 15% and 18% over FY18 to FY21. Now going forward, Nomura sees an addressable defense opportunity worth more than 1 lakh crore rupees over the next 5 years, and of this total order, it is expecting Cochin Shipyard to bag orders worth at least 24,000 crore rupees, which would extend the revenue visibility on the company till financial year 2030, says the brokerage. Lastly, the brokerage says that it is assigning the company a higher valuation multiple on the back of the strong growth prospects and because of a superior return on equity profile. Second we have is HDFC Securities on HG in front of the brokerage has initiated coverage on the stock with a buy rating and a target price of 386, which suggests a potential upside of nearly 61.5%. Now according to the brokerage, NHI ordering is expected to further pick up in the second half of financial year 2019, which will in turn address the longevity concerns on earnings upcycle for the company. Now when it comes to HG Infra, healthy balance sheet, stable working capital cycle and entry into HAM projects are the positives and the key catalysts for the company going forward. And on the back of these positives, the company is expecting the company order book, net revenue and net profit to grow at a compounded annual growth rate of 32%, 35% and 38% over FY18 to FY20. Now along with this, more subcontracting projects would boost the company's margin, says the brokerage. And lastly, the brokerage says that the firm grip over working capital and debt of the company should help the company deliver a high 20% plus return on equity going forward.
All right, Samit, thanks very much for that. So do keep an eye out for those stocks and the kind of brokerage calls that have come in there. Neeraj, we've been talking about up until the last few days before we started to see that correction, we've been talking about how the strength in the market is quite persistent, and you could probably actually see this as being one of the longest bull runs. I mean, the last period...
It has been, yes.
Yes, the last period was about 2012 to 2015. And on the index, and I want to quickly go across here on the chart and actually show us different periods right from 2004, the kind of nifty move that we've been seeing, versus the number of days that you've seen positive trade coming in on the index. So right from 2004, from a period of 2004 to 2006, you had the Nifty which moved up 170% before you actually saw a decline of 30% come in, after which from 2006, mid-2006 onwards, that big leap that you saw towards 2008 before the big crash happened, that showed you an uptick of about 136%. 59% drop. That's the time where you had the global carnage in the financial markets, which caused a little bit of stir and a little bit of flurry. But aside from that, the momentum equally quickly picked up by 2009, which propelled the index, the Nifty, higher by 144%. Again, after that, you did see a dip of about 27% before which you actually started to see the move, and now once again a 68% bump up. So it's actually not in terms of the kind of percentage changes on a low base. Obviously that will be higher. So if you take a period of 2004, 2008, the base was low, but now we are on a higher base. 68% is still not bad. But if you take a look at the number of days, and I want to bring that up, the kind of positive days of trade that we've been seeing on the index. So this is from 2004 to 2006, where the Nifty gained 170%. Positive trading days was 291 trading sessions. 2006 to 2008 with a 137% gain, 236 days which were positive for the index. But now the period of 2012 had the maximum of 366 days where the index ended on a positive note. Whether or not that continues and we break that record in terms of 366 days, we're at 348 days in this period starting 2016 and 2018. So it goes to see whether these few days of correction will last only for a few days, or we actually see that big correction and a bout of correction coming in and halts this record of 366 trading days. Just some key events to highlight on the index and to take you through the peaks and the troughs of the Nifty. So this is where you had the peak of the investment boom, financial crisis in 2008. General elections came about, and that's when you saw the Nifty move up that big 100-odd%, and the GST rollout this time around helped the index move to the next level. Now remember, it's again coming up to the election year, so we're going to see whether or not that can help the market get propelled and only reach.
It should be interesting whether it puts in some uncertainty into our markets or does it propel the markets higher. That's, I think, the key question. But thanks for that, Devina. Deven Choksey of KRChoksey with us on the show as well. Deven, good morning and thanks for joining in. Something similar to what we asked you the last time, but a lot has happened between the last 7 days, between you came last and today. Are you still sanguine about the prospects of the markets, or are you on a wait and watch and hold investments for the time being kind of a mode right now?
Hi Neeraj, good morning. Well, I think the market gives a clear opportunity. On one side, the macro fundamentals are shaping up well, save except I think the currency part. The currency part I think is something which is out of control, and that is the only speed breaker, if I may want to use it the word as, I think, which is basically affecting the rhythm of the market currently. You have good quarterly numbers coming up in the June quarter, followed by I think good set of auto numbers coming up. By and large, the monsoon progress in the country has been I think well received. So all in all, it promises to be a better earning year for most of the corporates going forward. Projects are under execution, and that's again I think a bigger promise. So what is missing here is I think the currency movement, and that is what my concern is all about. However, I would like to say that I think there are at least 50% plus kind of stocks I think which are having index weight, which are basically favorably affected with the currency's fall, because of the commodity value goes up, or because of I think IT, pharma's export value goes up, etc. So from that perspective, I think you are having some amount of opportunity in the market. Subdued market sentiment is definitely allowing investors to buy quality stocks in the portfolio. So I would be buyer in the fall, and I think selectively so.
Okay. By the way, Deven, stay on as the pre-open rates are settling down, and I would want to get in Gaurav and Chandan's views on these as well, some of these stocks. But I think it's also just 4 minutes left for the markets to start, so we'll tell you all that you need to know. Just remember, as the pre-open rates are settling down, we are looking like we'll start off on a very flat note. But let's tell you all that you need to know to stay ahead in trade today. And let's begin with Muthoot Finance. The company reported results post-market hours yesterday. Strong set of numbers saw net profit rise 43% and asset quality improving sequentially.
Says valuations in the FMCG space have entered unprecedented territory. The brokerage house has also downgraded Britannia and HUL to neutral from outperform.
Qatar Airways continues to explore opportunities in India. CEO Akbar Ali Baker told PTI that he won't rule out any future opportunity for investing in Indigo.
Among key brokerage calls, Nomura has initiated coverage on Cochin Shipyard. The price target of 534 rupees implies a potential upside of 28%.
Spark has released deadlines for the US FDA to review its 2 new drugs. The deadline for Zelpros and Ellipsia are November 2018 and January 2019 respectively.
And among bulk deals, SEF India Holdings has acquired 0.6% stake in JM Financials at 122 rupees per share.
Okay, as we see, not too many movers in the opening session. The top loser or the top gainer down or above less than 1% respectively. A stock that's under a bit of a cloud the last few days, Chandan, Taparia, Titan company, down another 0.5% today at the start. How do you trade this one?
Yes, we were expecting some bounce in the counter, but again it is respected to hurdle of 928, 930 zone. And because of the market selling being the high beta or the range bound counter, it again drifted lower. The immediate support for the counter is near to 875. So on today's trading session, if that is not respected, there is a 50% retracement of the recent upswing. Then it may go to us 850, 840 kind of zone. So some weakness could be seen. Yesterday it formed a big bearish engulfing pattern by indicating the immediate bounce back move. So weakness could drive. Holding below 975, one can trade the decline of 20-30 points on the lower side.
Okay. Gaurav, Bissa, IT continues its merry ways. If you were long into an Infosys or a Wipro or an HCL Tech, would you continue with that long position?
I would certainly continue to hold these names for the reason that one, they are in the momentum. Second, portions are still being built, if not aggressively. We are still seeing some amount of portions being built. And in a market where everything looks dicey, it is always better to stick to the names that are showing incremental strength. They might fall another 1% or 2%, but there's a limited chance that it will fall on a very small basis. I don't think we are going to see a 5-10% fall coming in what we have seen in some of the other sectors. So I would stick to the names which are stable and which are going quite strong, and in dips can be utilized to build fresh long portions. But if somebody has already bought, it makes good case to hold on to these names.
Okay. Avinash, just one stock before we head towards opening. Balkrishna Industries, last few days has been under pressure.
I think the fall has been quite dramatic, and the markets are clearly disappointed on the kind of capex program which the company has announced. I think clearly, if one were to look at the cash position and the kind of projects which the company has done in the past, Devina, I think this fall is slightly more than what the street has expected. I would believe that any price below say 1,000 or around 1,000 odd rupees should be a good buying opportunity, because the company has delivered earlier on taking on large projects like these, and obviously the markets are disappointed that such kind of big projects could obviously depress the return on capital employed, the margins in the short term, but longer term I think this business has a significant amount of operating leverage, a huge kind of headroom, and I think the company is a very large player in the European and the US market. So I would believe that any weakness around 1,000 odd rupees should be used as an opportunity to actually accumulate the stock.
All right, we've got about less than a minute left for market opening. I want to quickly go across to our technical experts to take the top calls for trade this morning. Let's start off with you, Chandan.
Yeah, I'll continue to be more convincing in selective IT counter. That's why I recommend it to go long on SCL Tech. Those who are looking for safety and the bounce back can also look at the SDFC Limited.
What about you, Gaurav?
It would be Mindray, as I mentioned, with the kind of positions that we're seeing getting built, the kind of breakout that we have seen, it makes a good case for another 4 to 5% up move coming in next trading sessions.
Chandan, sorry, which is the other stock that you mentioned in addition to HCL Technologies?
SDFC Limited.
HDFC Limited. Okay, great. Gentlemen, Gaurav as well as Chandan, many thanks for joining in today and giving us your views. Really appreciate your time. Markets, well, this is how they're starting this Wednesday morning. Flat as flat can be, and the mid caps and the small caps I doubt will be up in the green. I mean, they were decimated yesterday and they start off slightly weak today, at least the mid caps do. The small cap index lying absolutely flat in trade. So, well, no big reactions, and I think the heat map will give you evidence of that. Some correction, maybe a Vedanta and a Hindalco and Coal India. So commodity names looking slightly corrective today. And on the upside, the same set of winners, Pharma and IT, and to an extent Reliance, after being in the green yesterday, another 0.5% higher today. But frankly, there is little to choose from when it comes to these stocks. So hardly any moves there. Even Stevens for almost all the stocks too. GAIL is probably the principal gainer, and commodity names the principal losers. BP, HP, IOC though, that cloud continues on them. So another 0.5% down for each of these names. On the wall, I just want to pull up one stock before I hand it over to Devina. Interglobe Aviation. Remember, aviation is looking weak today as well. Jet Airways, for example, is down 2.5%. Indigo, about 0.75% higher, but at 950, 920, it's very close to the recent lows or the lowest levels that it's clocked in this calendar year. So aviation stocks continue under pressure too. A statement from Qatar may be helping a little bit, giving a little bit of fillip to Interglobe Aviation right now. Don't quite know how long it'll last. Devina, what are you spotting?
Well, the usual suspects, like you mentioned, Jet Airways is down about 2.5% in trade right now. You've got the likes of Cox and Kings trading at 220, 1.5% lower. BEML is down 1.33%. ACC is down 1%. Radico Khaitan is down 1%. You've got Berger Paints trading under as well. GE Power, GNFC. Chennai Petro, Godrej Properties trades lower in the session this morning. You've got Raymond down, Praj Industries down 0.8 to 1% apiece. RBL Bank is losing in the session, while Spun Corp, Oriental Bank of Commerce, PC Jewelers takes a little bit of a hit in the session. Marksons Pharma trades at 38, that's down about 1/3%. And you've got a Godfrey Phillips, which is lower as well. Tata Coffee is down about 0.5%. Among some gainers, far but few, we've got IOB, which is up 1/3. Shipping Corp is up 0.2%. So not a big margin by which they've opened positive, just a smidge in the green for Bajaj Electricals. A Capital First, which is also in the green, and you've got an MRPL, which is up 0.25%.
Well, interesting moves there. A lack of moves, if you will. Sun Pharma Advanced Research, though, starts off about 4% higher. Avinash, Avinash Gorakshakar, any thoughts on Sun Pharma? They released those key deadlines as well.
No, I think Sun Pharma Advanced Research, Neeraj, should definitely be in the limelight, considering the fact that the cancer drug as well as these two new drugs, if at all the fructification takes place, I would believe that you could possibly see a stronger re-rating. Hopefully in the next 3 to 6 months, the market would obviously await stronger visibility on these developments. But definitely a positive news flow, and I think the stock should gather momentum gradually.
Avinash, what are you spotting? Like for you, maybe an investment right now from a one-year perspective?
I think two stocks look interesting. One is typically from the auto component space, Mahindra CI. 60% comes from the US and the European markets, and they are very strongly present on the domestic side. So I would believe that you could possibly see a stronger re-rating here. And the other stock is HOEC. I think they are a pure crude play. And I would believe that in the second quarter, the management had hinted that the oil fields in Assam are going to be run at more or less 100% utilization. So I think you could possibly see the combination of higher crude prices plus some gas income. And overall, I think this stock has remained more or less static for a long time. So I think clearly, considering the fact that it's a zero debt business, a very strong player particularly in the pure oil drilling space, I would believe that this could possibly be a good outperformer. Hopefully, if the crude prices continue to remain upwards.
Okay. Deven, the last few days have seen a bit of a resurgence for pharma as well. Sun Pharma at 663 would be the highest levels that I've seen the stock at in a while. And it's not just Sun Pharma really, it's a clutch of other large cap, mid cap pharma names which are doing well. What are you guys advising your clients to do when it comes to large cap or mid cap pharma?
Yeah, Neeraj. So for some time now, I think we have been picking up few stocks, including Sun Pharma, Cipla, Glenmark, in our portfolio, and Dr. Reddy. Dr. Reddy little less, but I think the other three in particular. But the key rationale for buying this stock is we are seeing the visibility in the second half of this financial year, wherein likes of Dr. Reddy, Sun Pharma and Cipla have already clearly said that they are putting across some of the branded generics, the specialty products into the US markets. That gives you the visibility of the new revenue coming into the books for the companies. And as a result of which, I think the stock, the margins in the business will probably stand improved going forward. And as a result of which, I think we are seeing the stock prices continuing to go upside. I would think that having seen the US FDA related issues resolved in most of the cases, now the time would be that how successfully they would launch some of the new products and make the best margin out of it. So that's where I think the likes of Sun Pharma, Cipla, Glenmark, I think have rallied in the recent past, and we continue to remain strong on these companies. We believe that I think any correction in the price would be an opportunity. Of course, in the last part, I think the tailwind has also come due to the currency depreciation, and as a result of which it is brightening the prospects for relatively better margin compared to the earlier quarters, which is driving the stock prices.
Do you see the fatigue creeping in for Reliance Industries now after the, it's taken the onus to lift the Nifty on its shoulders in the last few months, but now it's looking a bit tired to you? Deven was asking about Reliance Industries.
This question is on Reliance Industries?
Yes, yes.
Sorry, I couldn't. Yeah.
Deven, the question is on Reliance Industries.
Sorry, I lost the words in.
Reliance Industries, Deven.
Yeah. Yeah, but what was the question, Devina? Sorry,
no,
I missed I think some of your
ask you whether right now you see a bit of a pause. Do you see the fatigue coming into the stock right now, Reliance? Because for the last few days, performance has been subpar.
Well, yes, I think this current correction in the stock price is largely due to, I think, the rally that it has taken place post the result from 970, 980 levels till 1300 plus levels. So I think it's natural to have some technical correction into the market. I don't see anything fundamentally wrong for a company like Reliance. On the contrary, as I have said before, and I stand validated on this particular view, that fiber to home is a game changer. With a 50 crore customer in sight, I think they are talking about 3 lakh crore worth of revenue and 125 to 150,000 crore worth of EBITDA. So this is going to be a game changer for the company, because this business is going to be larger than the business of core Reliance, which is current. So I would think that yes, I think any correction in the stock price is a welcome correction, because I think you are seeing a clear change in the direction for the company from the consumer retail and the geo platform business.
Interesting. Deven, while the auto story seems to be still on, the auto ancillary story seems to have gotten disrupted big time, not just for the larger names like Motherson Sumi and Bharat Forge, but for some of the mid-sized names as well. A very strong player called FIEM, for example, a lot of promise A stock has completely collapsed, trading at 52-week lows. Amongst the stronger names, Jamna Auto has now started correcting. It's just something that never happened in the recent few months. What does one do here? Any auto ancillary business that you believe is good to invest into, because valuations have now come off quite materially?
Neeraj, I think fundamentally nothing is wrong with these companies. On the contrary, I believe that I think the way in which their customers are showing the growth in their business, all the commercial vehicles, farm equipment business, passenger vehicle business, two-wheeler business, each of the customers of auto ancillary companies have started showing distinct amount of growth promise. And on the contrary, I think the prospects are brightening for many of the auto ancillaries. I would think that I think some of the quality names would record a growth performance of more than 20%. Given this kind of a strong fundamental, I don't think anything wrong with the business. However, I think the situation is slightly, tricky out here as far as I think the mutual fund activity into this stock is concerned. You have typically three category of funds now: the small cap, the mid cap, and the large cap, which less than 10,000, less than 25,000, and more than 25,000. So in these three categories. As a result of which, I think the exposure in particular, because collapsing of the scheme, the exposure in mutual fund, I think probably would get restricted. And that's where I think you are seeing the tapering of the buying demand into the stocks in the marketplace. I don't think any company is fundamentally doing wrong. Maybe I would think that some of the global funds are looking at these companies very, very favorably, and they would probably start buying. So the fresh buying could emerge from the global side vis-a-vis, I think, the local mutual fund side from in the auto ancillary space. So I am relatively confident about select names in the auto ancillary space.
All right. Let's talk about Graphite India, because Macquarie has put an outperform on the stock and they've given it a price target of 1410. That's a potential upside of 41%. Avinash, do you track this one?
Deven, I think if you see the price performance of HEG and Graphite, Graphite has always been a laggard as compared to HEG, and I think if you see the overall operational metrics of the Graphite electrodes markets, most of the managements, in fact both Graphite as well as HEG managements post the Q1 numbers have sounded that at least for the next 2 to 3 quarters globally, Graphite electrodes prices are pretty strong and needle coke prices are well within control, which is the key input for them. So I would believe that yes, if somebody were to take a call on this sector, then I think Graphite definitely looks much better position as compared to HEG, where the price upside has already happened to a large extent. So I think to that extent, despite the fact that Graphite is a slightly smaller player compared to HEG, considering the kind of global metrics and the pricing as of now, I would believe that this stock could definitely give a decent return even from the current odd levels.
Deven, your preferred stocks in the current market setup?
So I think we like few companies in the corrective downside and probably would like to pick up, and that would be in the auto space. We find that companies like Tata Motors and Ashok Leyland, they remain distinctly positive given the kind of a volume pickup that we are seeing in the commercial vehicle segment. I think valuation wise, I think Tata Motors in particular is available at a fairly comfortable valuation. The downside is limited, so the negatives are priced in at this level. We like this particular company. We also like within the auto ancillary space a company like Minda Corporation, where I think the company is showing a robust sign of growth. I think around 20% plus kind of a growth that is being seen in this company with a good customer portfolio that they have across all the verticals. So we like this company. Similarly, we find I think merits in some of the insurance business, in particular life insurance business, where allocation of money from the saving fund has started going more towards the life insurance, and life and health insurance businesses are actually I think looking really more interesting. So we like likes of HDFC Life, I think, which is relatively a quality play. Similarly, I think corrected downside is offering big opportunity in companies like Kotak, which is basically moving with a big theme of financialization of the banking space. So you can probably I think count on names one after another where I think you would find that opportunities are becoming bigger and the companies are available at corrected valuations. So that's a buy opportunity for us.
Very interesting. Okay, just before we take a break, just looking at the losers for the day today, the commodity names have come off, the likes of Vedanta, Hindalco, etc. Just a little bit of pressure out there. Titan Companies 873 looking under a little bit of pressure. Bharti Infratel at about 280 under a little bit of pressure. Actually, Deven, A pocket that I think you've discussed in the past, but just wanting to get your views on this. From amongst the retail names, which is Trent, Future Retail, and Aditya Birla Fashion in particular, do you like any of these? All of them have now started to make a move, and after a really long hiatus, we've seen Aditya Birla Fashion break that barrier of 200 and moving higher. Is there merit in trying to own these stocks, fundamentally, any of these?
So fundamentally, Neeraj, I find that I think the business model is shifting to an omni-channel model, wherein online to offline and offline to online, as we call it O2O2 model, I think is emerging now. And the companies with a very strong backend, where they have set up the complete logistic management for the physical stores that they are having, they would be the prime beneficiary in this particular model, because digital foray is something which is relatively easy compared to what it was before, because the complete ecosystem and the infrastructure for digital marketing is now in place, including connecting the banking gateways. So from that perspective, those companies which are typically moving with the omni-channel kind of a model, they would possibly be the bigger beneficiary of this entire retail. The names which you have mentioned among these three, I do not know, I think, whether they are seriously into that or they are putting larger amount of money into that particular activity. Yes, digital is expensive, but I do not know whether I think they are putting enough money. Reliance Retail, I think, is connecting himself with the Jio platform, and they are creating this O2O2 model. So which is something I'm pretty convinced that I think could probably work well, because they have got a complete infrastructure in place as far as I think driving this entire retail business is concerned, on physical as well as on the digital platforms. So we'll have to wait and see for Reliance Retail, but among the three which you have mentioned, no, we don't have the higher amount of conviction on them.
All right. Just one pocket to look at, and before that, just quickly looking at Muthoot Finance on the back of its numbers. The stock's doing really well. It's up about 5% in trade right now, but there you have it, 420 for Muthoot. The highest point of the day right now, 5.5% higher on good volumes. Let's take a look at what's happening at the cement space, and you've been seeing some interest that's building up in a few counters like in India Cement, but it goes to see on a day-to-day basis right now. Grasim, ACC, Ambuja, just to pull them up. India Cements is in the green by about 0.5%. Grasim is also trading positive. A call on cement, Avinash?
I think cement companies, both from the front line as well as from the medium space, should do well. I would believe that Ultratech and typically ACC should definitely look up. I think ACC looks relatively attractive if one compares the valuations to other cement companies. But I think within the southern pack, Devina, we like Ramco Cements. I think Ramco is one player which I think would benefit significantly from a volume push and obviously a pricing improvement, hopefully post the monsoons.
All right. Avinash, we'll leave it at that. Thanks very much for joining. And that's Avinash Gorakshakar with his calls on the market. Deven, Choksey, thanks very much for joining and appreciate your views as well. Markets, a slow start in the morning for the indices, the Nifty as well as the Sensex now trading in the green, but just by a smidge.
Yep, let's take a break. On the other side of the break, we discuss the emerging market risks in the global economy and markets, from trade tensions to crisis in Turkey and Argentina. A conversation with Peter Oppenheimer of Goldman Sachs coming up. And then talk about Muthoot Finance's first quarter earnings with Managing Director George Alexander Muthoot. Stay tuned.
The heart wants what it wants, and mine has led me to some amazing highs and lows as I followed its guidance from software development to investment banking and then into my own startup. I'm Ahmed Aftab Naqvi, and my journey has been a roller coaster ride. When I started my company with a single laptop in a garage and two friends armed with just the burning desire to create something, I had no idea that we would create a whole new paradigm of marketing. Today, Gozoop is at the forefront of the industry, a thought leader in the space and voted as one of the best places to work for in India. But we didn't get there quickly. But everything taught me and engineered our success. It's an interesting story, and I'm really looking forward to sharing it with you.
Aegon's of business never stop. Only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Thanks for tuning in to Bloomberg Quint, a very special guest to talk about the global trends and how are global markets looking from here on until the end of the year or maybe longer. Peter Oppenheimer, he's Chief Global Equity Strategist and Partner at Goldman Sachs International, joins us on the show. Peter, good having you. Thank you so much for taking the time out. The last few days sitting out here in India, we've been besieged with news flow in the emerging markets in a meaningful way, be it Turkey, be it Argentina, be it the recent news flow around Brazil and the political situation there as well. Add to that, the whole trade spat between US and China is dominating headlines. How are you reading all that's happening in the world markets and the impact that it could have on equity markets from now on until the end of the year?
Well, thank you for having me. I think that you're right in terms of the focus of investors at the moment. It is very much on two issues, and they're related. One of them is trade and where the potential trade tariffs end up in the case of the US and what the repercussions for that may be globally on the economy. And secondly, on emerging markets. And as I said, in a sense, the two are linked. Our view is that we will see more tariffs from the US, particularly related to China, as they have threatened. But we do not think this will escalate into a broader and deeper global trade war. And when we look at the impact on global growth of the kind of scale of tariffs which the US administration have talked about implementing, we think the overall effects are relatively small, knocking 1 or 2/10 off growth, for example, in the US and China. That said, I think that this issue is going to continue to be a focus through to the end of the year, and it raises uncertainty because it, of course, the reaction to the implementation of tariffs could be that you end up with a greater escalation of a trade war, which has a bigger impact on growth. In terms of emerging markets broadly, we see many investors as being rather concerned about the risks of contagion from the countries that you've already mentioned. On this particular issue, we're relatively more sanguine. We think that overall emerging markets in equities are offering good value, and most emerging markets are not as vulnerable as they were, for example, back in 2015 or 16 when the dollar was rising and US interest rates were picking up, because most countries have less imbalances now than they did then.
Interesting. Are you more sanguine about the global GDP growth numbers from now on until the next 18 months? Or do you believe that, specific instances like crude notwithstanding, there could be some headwinds coming into growth because of technical factors. In the US and the European region, the QE tapering or pullback or higher interest rates, which the Fed has almost made it a given that will happen. And back home in India as well, we're seeing signs of that. Could there be impediments to growth over the next 18 months?
Well, we certainly think that global growth will slow over the next 18 months. We've just seen incredibly strong growth numbers, particularly in the US. The second quarter was revised up to more than 4% at an annualized rate. We think that will be the cycle peak. And we've also seen other parts of the world, both Europe and Asia and emerging economies, slow from the very fast rates of growth that they saw at the end of last year and the beginning of this year. But we do expect global economic growth to remain at close to around 3% over the course of next year, slowing a bit beyond that, but still positive. So although this has been a relatively weak economic cycle globally, going back to the financial crisis a decade ago, it's likely to end up being the longest global economic cycle. And we think that will continue to support global profits. Although they'll be slowing relative to the pace we've seen this year, they're still likely to be positive, and that should support equity markets too.
The camp is divided between the impact that the gradual QE tapering will have on the markets versus people believing that while it is gradual in nature, it is right there and evident and a stark departure from the easy money that we've enjoyed for the last 8.5 odd years. What are your views here?
Well, you're absolutely right. It's a very different environment that we're moving into. The crisis economically and in financial markets a decade ago was very extreme, but the policy response to it was unprecedented, with global rates moving towards zero and the adoption of quantitative easing in one country after another. We are finally coming out of that phase of extraordinary policy easing, and we are likely to see rising rates, particularly in the US. Our own view is that rates will rise in the US next year more than the markets are currently pricing, and we expect the exit of QE also from Europe as well. I think the most important factor that this is likely to result in is no further valuation expansion in financial assets. If you look at bonds and credit markets, equities too, they all enjoyed significant rises in valuation as a result of interest rates falling to record low levels and the impact of huge amounts of global liquidity. That process is now coming to an end, and we think that as interest rates in the US rise and as you start to get an exit from QE, you're likely to see valuations remain contained or even moderate a bit. And therefore, in the case of equities, it will really be profit growth alone that drives the return. And we certainly expect to see lower returns in equity markets and indeed in bond markets over the next couple of years than we've seen over the last few years. But still, in the case of equities, positive returns.
How do markets behave then, Peter, over the course of the next few months? Simply because as in the US, so in India, we're seeing a very narrow set of stocks taking these markets higher. In India, there's stark evidence of that. In the US, the famed FANG rally is leading these stocks higher. I'm sure it's not just the FANG stocks, but a few others too. But it is largely a narrow market. Is that a cause for worry, or are people making too much noise around this issue? How does it matter if it's a select set of stocks which are doing up right now and maybe a new set of winners will emerge in the next year?
Well, I think that this narrowness and sector dominance that we've seen, particularly in relation to technology, probably will continue. The reality is that global growth is, we think, going to be positive but relatively slow. But more importantly, companies globally are finding it harder to generate fast top-line growth. There's just fewer genuine growth companies, and that suggests that investors will continue to seek out and be prepared to pay a premium for genuine growth companies. Many, not all, are in the technology sector. And the technology sector has really dominated this global bull market in the last several years. But it's been driven not really by valuation expansion, but by genuine profit growth as these companies really benefit from massive disruption across lots of industries. It's not untypical for market leadership to narrow in the later stages of bull markets, but I don't really think this is likely to change very dramatically. And I think that investors will still seek out and pay for companies that can maintain, grow margins or top-line growth. And there are a narrowing group of those companies available to investors globally.
Well, in India as well. My last question, Peter, and specific interest to people out here as well. I don't know how closely you track India, but a top-down call maybe, or a view on India as a market. It's done really well compared to the rest of the EM pack, particularly in the last 3 or 4 months of the current calendar. But an expensive market showing visible signs of growth, both on the GDP and on the earnings. Any thoughts here?
Well, I think that India is an economy with tremendous growth potential, and although is seen as an emerging economy, it doesn't suffer from the big imbalances that you see in some of the countries where the current focus is most intense. And plus, you have some very exciting growth companies, which, along the lines that we've just been discussing, are attracting both domestic and international investors who are looking for genuine growth opportunities in large markets which are expanding. So I think the prospects remain very positive, particularly in the long run. And although there's a lot of intense focus right now on emerging markets and the fear of contagion, we think that those fears may well be overdone, and that although there are specific concerns in some emerging economies which are facing particular economic stress, that's not true for emerging markets as an asset as a whole. And I think that investors will continue to be more differentiating in the space.
Thank you so much, Peter Oppenheimer, for speaking to us today at Bloomberg Quint India.
Thank you so much.
Hello and welcome to Bloomberg Quint. India's largest gold finance company, in terms of loan portfolio, reported strong set of numbers yesterday. And to decode the same, we are in conversation with George Alexander Muthoot, the Managing Director of Muthoot Finance. Very good morning, sir. Thank you for joining us on Bloomberg Quint.
Thank you. Thank you.
Sir, after seeing muted growth in gold loan AUM in last 4-5 quarters, we have seen a double-digit growth in gold loan portfolio in the quarter gone by. What has led the growth there?
I think one of the main reasons should be the uptick in the industry, in the economy, and as predicted by many, the economy is also growing. It is expected to grow by 8.2%. I feel that economic activity has started picking up in the last 3 months, and we see not only in the last quarter, as we speak also, we see the better credit offtake happening in all the branches all over India.
Also, sir, what kind of progress or if at all any recovery if we have seen in gold auctions, if you could discuss about it?
The gold auctions have been very less in these 2 quarters because we have been trying and putting in new methods, new systems to see that all the customers are contacted and persuaded to close their loan accounts or to pay and renew the loans. This is actually giving us good results as opposed to auctioning on the gold. So auctioning has been much lesser in the last 3-4 quarters. And this quarter also, auctioning would be much lesser going forward too.
Well, speaking of gold loans business, what kind of traction are you seeing on the digital front? What kind of initiatives is the company taking on the digital front per se?
See, as far as digital is concerned, we are doing all the necessary support for encouraging our customers to go digitally. Many of the customers now pay their interest and also part of the principal digitally. They have also been, we have also enabled them to take loans also digitally, and now we have enabled it 24/7 so that any customer who has a gold with us can, sitting at home through his app or his computer, get the loan credited to his account in seconds. So earlier it was not 24/7, now it is 24/7, and we are seeing more and more people starting to use this facility. Of course, we inform them also whether more money is available for them, and as they get informed and when they need it, we see more traction in the gold loan advance front. As far as repayments and interest are concerned, they have been using it much better. Every day, we feel it is getting better and better.
Sure. Talking about asset quality, it has improved substantially in the quarter gone by. Where do you see it stabilizing, say, next 2 to 3 quarters?
See, as I have been always saying, the NPAs of gold loan companies are of no consequence as far as loan losses are concerned. Because whatever is treated as NPA is just because these loans have crossed the time limit. But the gold is there, 100% security is there. We have never lost even 1 rupee till date through a NPA account. So whether the NPA was high or low is of no consequence to us. But having said that, maybe the media, the analysts sometimes are concerned when the NPA goes up. Last quarter, the NPA was 6.85%, and today, this quarter, the NPA is 2.85% only. So whether it is 6.85 or 2.85, it's of no consequence. But why it has come down, one of the reasons is that earlier, any customer who had a connected loan was with an NPA was also treated as an NPA because the auditors wanted to do like that. But this time, because of the Ind AS provisions, this is not required. So that is one of the reasons the NPA has come down from 6.85 to 2.85. But as I always say, NPA is of no financial loss to the company. We give more time to the customer. You asked earlier about auctions. So we can bring the NPA to zero by doing auctions. But giving more time to the customer, we are actually maintaining that customer. It is more customer friendly. And since we are not losing any money, we give this support to the customer by not auctioning it.
Sir, if you could talk about your other businesses, say microfinance, home finance, consumer finance, how do you plan to grow the same? Also, if you could give us segment-wise growth expectations.
See, as far as the home finance is concerned, it has a portfolio of 1,620 crores as of last quarter. And we have targeted an AUM of reaching an AUM of 2,500 next year, 3,500 year after that, and 5,000 in the year after that. So by 3 years, we should see the AUM of the housing finance company reach 2,500 crores, 5,000 crores. So this year end, it should reach 2,500 crores. So we have branches all over the country, and the branches of Muthoot Finance are also used as spoke and hub to get customers for the affordable housing finance. So they work hand in hand with the Muthoot Finance branch, and that's about the home finance. As far as the microfinance business is concerned, it has an AUM of 1,300 crores as of date, and they expect the end of the year to reach 1,900 crores. Both these companies, Muthoot Finance is putting in more capital. In Muthoot Home Finance, we have committed a capital of 150 crores. It's a 100% subsidiary of Muthoot Finance. We have committed a capital of 150 crores, which will be given to them in the next Q2 and Q3. Similarly, the microfinance company also is getting some capital, around 100 crores, in the next quarter for augmenting their capital and also to shore up the capital adequacy norms. So these two companies are growing. They are showing good growth and are growing as per target. As far as the venture in Sri Lanka is concerned, it's also doing well. But of course, Sri Lanka being a very small country and with the political uncertainty, etc., also there, it is growing very slowly only. But then we have received the permission from the Central Bank of Sri Lanka to open 10 more branches for gold loan purposes, and we expect to see the gold loan portfolio in Sri Lanka growing in the next 2 years. So that's about the growth. And about the other consumer loans, we've just started a personal loan. It is a personal loan which is given to salaried customers, 1 lakh, 2 lakh, 3 lakh. It has a portfolio of about 50 crores as of date. It is behaving very well, and we should see, we will see that this portfolio also grows in the next 2-3 years.
Sure. Sir, lastly, if you could tell us, the company has a plan to raise nearly 5,000 crore through the issue of non-convertible debentures. Where do you plan to deploy these funds?
See, this is our working capital. This, we have a AUM of about 34,000 crores, all the group companies put together. And the source of these funding are bank funding, NCDs, listed NCDs, etc. And this 5,000 crores which we are planning to raise is private placement. So as and when we get the money, it will be used for working capital. We have bank funding, bank limits, and also commercial papers. These will be interchanged, and the money will be used for these purposes only. So this is nothing unusual. Every year we raise 5,000 to 6,000 crores of NCD, because some NCDs get redeemed also every year. So it's an ongoing process. Nothing very new about it. But this time, this 5,000 crores is a private placement.
Sure. Thank you so much for joining us on Bloomberg Quint, sir. It was a pleasure speaking to you. So that was the management of Muthoot Finance, confident about growing their other business segments, say microfinance, home finance, along with insurance business going ahead. Thank you for watching Bloomberg Quint.